One of the most important conferences in the gold mining industry, the Denver Gold Forum, other than PDAC, was earlier this week. And like clockwork, the paper gold price in US dollars was smashed. Unfortunately, this happens every year right around and during the Denver Gold Forum. However, unlike in prior years, this time is different. Why is this time different? Because a lot of producing gold miners, the larger gold miners, the mid-tier gold miners, have enormous amounts of cash. They have clean balance sheets, enormous amounts of debt have been paid off with record profit margins and record free cash flow numbers over the last 18 to 20 months. Gold miners are, for the first time in the almost 15 years that I've been covering the gold and silver industry, this will be the first time that larger gold miners and mid-tier gold miners will be aggressively looking at acquisitions because they actually have cash and they actually have good profit margins and cash flow despite paper gold prices being smashed down to $1,750 level to go and do acquisitions. And it definitely is a buyer's market. It's not a seller's market. Cash flows on producing mines are extremely deeply discounted. There are unbelievable deals for large gold miners and mid-tier gold miners to go and buy quality either producing mines or near-term production mines. Although at this point, it is a lot cheaper to buy a producing mine because the cash flows are that deeply discounted. Look at all the portfolio managers, the mainstream portfolio managers, the mainstream global macro experts, and I'm using air quotes here, that are talking about how gold is dead, they're shorting gold, they sold all the gold in their portfolio. This is normally a contrarian indicator. Meanwhile, the industry, the gold mining industry, has never had more cash on the balance sheet, has never had better profit margins, has never had this type of ammunition with cash on the balance sheet, clean balance sheets, not a lot of debt, and profit margins at record highs or close to record highs, and free cash flow to go and buy assets that are deeply discounted. So the next 6 to 12 months, I think there's going to be a lot of acquisitions. I've heard some rumors from some gold company executives that were attending the show, and there's already multiple bids on some of these more attractive assets. So there will probably be articles coming out in the next week or two about which potential mid-tier gold miners are the most attractive acquisition targets. There are some really interesting discounted producing gold mines out there. I think a lot of the focus is going to be on more geopolitically safe areas like Australia and Canada, although a lot of governments are starting to increase taxes on miners, although I think a lot of those are more about base metals and in South America. But nevertheless, there will be a lot of acquisitions because you have buyers with a lot of cash, you have buyers with clean balance sheets, you have buyers with record profit margins and record free cash flow, and you have deeply discounted cash flows on producing gold mines. So you're going to see larger gold miners buy mid-tiers or near-term junior producers with maybe one asset, or you're going to see mid-tier gold miners aggressively either try to merge with other mid-tiers or go and buy smaller companies. And this is going to happen in the next 6 to 12 months. We have never seen this before because with a lot of commodity industries, normally when sentiment is this negative, normally the companies do not have a lot of cash on the balance sheet. Normally they have a lot of debt. Normally things are more similar to how things were with the oil market 18 to 20 months ago, where sentiment was very, very negative for oil and natural gas. But a lot of the oil and natural gas companies, including the producers, had insane amounts of debt on their balance sheet. And yet there was still a number of acquisitions. They were forced fire sales, though, where like Parsley Energy had to sell and Concho had to sell and some of those other types of deals. But this is not the case here for gold miners. So you are going to see a lot of mergers and acquisitions pick up. Again, this is not going to benefit a lot of the smaller companies because cash flows are so deeply discounted. Asset valuations are so deeply discounted. This is going to favor shareholders in the long run of the larger companies that are buying those assets, especially ones that are already cash flowing with good profit margins for pennies on the dollar. But if you're looking for physical gold and silver, my friend Joseph over at Premium Tracker Silver Stacker, he tracks the premiums for all the online bullion dealers, which ones have the lowest premiums. He does this once a week. His YouTube channel is free. That's Premium Tracker Silver Stacker. Joseph is a friend of the show, and he's also a patron. I think he does an excellent job tracking the premiums for gold and silver bullion dealers, which ones have the lowest premiums. So if you're interested in that, just take a look at his YouTube channel, Premium Tracker Silver Stacker. Again, that's free. Finally, if you like content like this and want to help keep content like this free so it doesn't all end up behind a paywall, or you want far more in-depth content, research, financial education, and analysis, like you want to hear me go through a Uranium Juniors investors presentation, which will probably come out in the next couple days, an audio podcast exclusive for patrons, or you want to read about which potential acquisition targets some of these larger gold miners may be looking at, which will also probably be an article out in the next week or two. There will be more in-depth research behind the paywall for my patrons, all for the cost of a Starbucks cup of coffee per month, only $5 a month. I think it is one of the best deals out there. And just in the last 13 or so weeks, there are 29 new articles out about a lot of interesting topics about global macro companies and sectors, on a lot of topics about the commodities market, gold mining, silver mining, precious metal royalty and streaming companies, which gold stocks, despite the paper price smashes that have been occurring routinely now, are actually still increasing their dividends. And there are over 180 articles, charts, and audio podcasts behind the paywall exclusive for patrons, a lot more in-depth than these short little free videos. So if I could wrap up this short little video very quickly, there is going to be a lot of mergers and acquisitions in the gold mining sector in the next 6 to 12 months. They will be from larger gold miners and mid-tier gold miners. This is the first time in my almost 15 years covering the gold and silver sector that the mining companies actually have a lot of cash, actually have clean balance sheets, actually have good profit margins, and actually have good free cash flow to go on an acquisition buying spree. And this is clearly a buyer's market. This is not a seller's market because of valuations and how deeply discounted cash flows are on producing mines. However, this will not really benefit a lot of shareholders of a lot of junior mining stocks unless you are really, really patient in an acquisition and willing to hold the shares of a larger mining company for a long period of time. But for the larger gold companies, these acquisitions will pay off. Look at the acquisition that Kirkland Lake Gold did a couple years ago of Detour Gold. They were extremely heavily criticized at the time, but in hindsight, 2.5 years later, under 3 years, Kirkland Lake Gold management has drastically lowered the costs at that mine, and that mine is now one of the lowest cost gold mines in all of Canada, with an enormous reserve life. So these acquisitions, in hindsight, 2 or 3 years later, if the competent management team at a large miner knows what they're doing, they may be criticized at the time by mining stock analysts and investment bank analysts who are extremely skeptical of the deal. But if you go and look at the deal 2 or 3 years later, it may pay enormous dividends down the line, like it has for Kirkland Lake Gold when they bought Detour Gold.